Hi everyone and welcome back to my morning report and chart appraisals on Monday the 6th of November with me, Richard Perry, market analyst at Hantec Markets. Looking at cable, we've seen cable which is sort of back towards these this confluence of support, the big long uptrend. I'll zoom out to show you that uptrend that cable has been in. Even if you sort of ignore that as a spike, the cable has been in an uptrend pretty much since March, pulling higher. Back to that uptrend, you got the support of the recent low 30.25 and also this 144-day moving average, which again has supported all the big corrections in the past few months. Back to that support and holding. Friday's marginally positive candle, followed by today's move as well. Seems to be that the market is still holding up. It's a very slight sort of negative bias, I suppose you'd say, on the momentum indicators, and that sort of reflects obviously the drop away that we've seen back towards the 1 month lows, really. So yeah, there is still an element of negativity, and the market, I think, is still sort of looking to which way it's going to break. Is it going to break to the downside? Is it going to follow the likes of euro dollar lower? Dollar yen's been testing the water, although it has sort of wound that of that initial dollar breakout. So the market is still holding on to this cable key support, and it's actually rallied this morning. It's sort of pulled sort of higher as the Europeans have come in and started trading. So 31.40 is the initial resistance, and that's sort of a bit of a pivot in the last few weeks, really. Sort of acted as a bit of a high and a bit of a low. Late October provided a pivot level, so that's a level to look out for. 31.30 was Friday's high, so there is a degree of sort of looking out for that level. Break above that, you're looking at 31.70 again. It's a fairly sort of okay level of resistance. I wouldn't class it as anything to really hang a hat on. And then 32.30 again is okay. And to be honest, within this sort of range that cable's been in, you sort of got some marginal supports that, and resistances that have sort of played out, but nothing really until you hit the extremes, sort of between 30.25, 33.35. So yeah, you wouldn't sort of be putting too much weight on these interim levels that I'm talking about, but they could be seen as possible sort of directional moves, but yeah, very near term, if anything. Looking out for the momentum indicators, the RSI, which went so deeply oversold on Thursday, Friday last week, back below 30, is sort of unwinding quite quickly. MACD lines, if they go above neutral and hold above neutral, you'd sort of say you'd be turning more positive again within the range. So you're still sort of hanging on to this range play, and again, if you see a move above 70, holding that move above 70, then that would again be indicative that the market is holding on to this sort of range outlook. But I think you've got to continue to play it as a range until you break to the downside below 30.25 or above 33.35, and obviously for now we're sort of in minor rally mode, although above 31.40 you'd start to sort of generate a little bit more upside traction, I would say. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.